Sorry for that. Good evening. My name is Rudi, and tonight we're going to go through the Sharetrackin Basic 2. So tonight what we're going to do is we're going to go through the stocks page and also show you how to buy shares and also how to um, analyze the share on your chart, obviously, before you go and buy. So first of all, what we're going to do is we're going to go through to analysis, and we're going to go through to stocks, and it's going to give you three different lists. Now, the first list that you'll get is my stocks and watch lists. So any shares that you've added onto your watch list will appear on your right hand side, and then any stocks that you've bought will appear on your left hand side. So this basically is for all your portfolios. So let's say, for instance, you've got a simulation plus a homework account plus an extra account. All your shares will be added onto the stocks page. All right. Same with your watch list. All right. You've only got one watch list to work with. Below that, you've got the share filter. Now, the share filter is a bit more advanced filter. So tonight, we're not going to use the share filter. We're sorry, we're going to use the additional advisors. Now, underneath the additional advisors, you've got MACD, RSI, time series forecast, long, medium, and short term, simple moving average of 40 days, your stochastic share track in 2020, and then the advisors info. All right. Now, there's only two folders that I like to use on the additional advisor. Now, that's going to be long and stochastic, but you can add others as well if you feel like, okay, long and stochastic isn't enough for you to use. Now, long basically means long term, but it will give you some medium and short term shares in between as well. So I'm going to just click on long, and it will pull up an entire list of all the shares that is in a long. All right, so it's got all the shares on this list. Next, we're going to go and add the stochastic. Now, the stochastic oscillator is a great indicator telling you basically when the share is at a turning point, when the share is basically low, turning into a bullish trend. Now, what we're going to do is, firstly, we're going to filter out the volume, and then we're going to filter out the long and the stochastic. Now, volume is basically the amount of shares that's been traded for today, for the trading day. So it's not the amount of transactions that's been done, but the amount of shares that's been bought and sold during today. Now, volume, we're going to change to greater than 100,000. Now, reason we do that is because the higher that value is, the more people you'll get that bought and sold in that share. If you're going to look at a share that's done nothing for the day, or nothing for a week, or nothing for a month, I mean, those shares, obviously, there's no interest in it. So you'll be able to buy because there's shares available, but you won't be able to sell those shares. All right. So it's better to look at shares that's got high volumes. All right. Same with if you were using the share filter, you would have looked at value, but because we use the additional advisors, we're going to work on volume, which is much easier to use. Next, we're going to filter out on the long and the stochastic. Now, what you're typically looking for is a double buy indication. So we're going to change both of these to buy indications. So we're going to change the long to buy, and we're going to change the stochastic to buy as well. And it should give you a short list of all the shares that's giving you a double buy indication on long and stochastic, and also with a volume greater than 100,000. So you've got a short list of shares to go and work with. Now, right at the top here, we've got Clicks Group Limited, then Impala, or DRD, the Spar Group, and so on. So we've got a few shares that we can work with. Now, right at the top, it will give you star signals. Now, the first star signal is shares in current holdings. So you'll see, for instance, that I've got Sibanye, Stillwater, AGL, and Pan Africa. So those three are currently on my holdings. So those are shares that I've actually bought. Shares on watch list will appear in orange. So like, for instance, Clicks and DRD would be on my watch list. And then the ones with the stars are the shares on the winning shares list. So you can see all these ones with the stars next to them. Those are the shares that's on the winning shares list currently. All right. So we're gonna go and analyze Clicks Group. So Clicks I've looked at earlier. Clicks looks like it might turn around. So we're gonna go and look at the chart for Clicks. So we're gonna click on the share itself. So any place in that where the share is listed, you can just click anywhere. So it doesn't matter if you click on the name or if you click on the buy indication. It will give you the security details for that company. So first of all, the security details will give you a little bit more fundamental analysis. So first of all, you'll get the info for the company, what the company's name is, the code for the company, what Clicks does, with the industry, the sector, contact details, the email address that you can get a hold of them, residential address, the postal address, and then when the year end is. Now, Clicks is year end is in August, and then also the website. So if you want to visit their website, the link is also there. So all of these shares will have a security detail telling you a little bit more about the company, with the directors' dealings, what the directors are currently doing, the dividends that they're paying out, the financial statements for the last 3 years, the market news for the last while, the details of the company. Now, details will give you general details, like for instance what the code is, the currency unit, the security type, all the way down to industry subgroup. And then at the bottom will give you the latest trading values, with the opening price, the highest price, the lowest price for the day, and what the last price is, and then also the volume that I did for today with the change, and then the percentage change, and then the amount of deals. Now this is the amount of deals that's been done with that volume. So that's the volume for today, and then the amount of deals that's been done. So that's the amount of transactions that's been done for the day with that amount of volume on shares. All right. That's why I say volume ain't the amount of transactions, but that's the amount of shares that's been bought and sold, and that's the amount of deals. All right, the transactions that's been done. Then your broker consensus forecast gives you more or less an idea of what the brokers tell you if you can buy shares now on the current share you're looking at, or if you need to hold on to them if you already got, or if you need to sell the share. All right, so the brokers also give you more or less a little bit of a forecast on where the share is going to head to, and the little snapshot of the current chart. So this will give you more or less an idea of what the share is currently doing, and then the history will give you the last 30 days worth of info. All right, so on what the share has been doing for last 3 months worth of info, telling what the share has been doing for the last 3 months. All right, so with all its opening price, highest price, lowest price, closing price, and then the volume traded. Okay, now we want to go and do technical analysis now. So this is all fundamental. So you can always use this when you buy a share. You can when you buy a share, then you can do fundamental analysis beforehand as well, and then use that reason that you got in the comment section why you bought the share. All right, so because when you make a comment on a share, it needs to be either 2 technical reasons or 2 fundamental reasons, and you'll find your fundamental reasons out of this. Okay, but we're going to go over to Charts IQ now because we need to do the charting. Okay, now first of all, I'm just going to remove all the indicators that I've got on here. Now, first of all, what you'll get is a candle chart right in the beginning, the moment you load your Charts IQ. So we can see that if we zoom out, that CLS has been doing really good. So Clicks has been growing for a while. So since 2009 up until now, Clicks has been going strong. All right, straight in an upwards direction. We did have some did have a big fall here with COVID. It went straight down, and then it started to grow again. We have a little bit of a fall now, but that's a good thing. All right, so it doesn't mean because the share is going down now that it's a bad thing. All right, you need other indicators telling you why the share is going to go up, and that's why we use the long and the stochastic. So long is basically it's going to look at this term. So this is a long term. Okay, so the share is in a constant bullish trend. Okay, so then the stochastic is the other one that we also need to go and add. But before we do that, first what we're going to do is on top of the candle charts, we're going to go and add a moving average. Now the moving average is basically a average that it works out on top of your pricing. All right, so what it does is, for instance, with a 50-day period, it will calculate, it will take the last 50 days' pricing, put them all together, divide that by 50, and it gives you an average for the last 50 days. All right, so working out an average is really easy, but we're going to change this to 200. So it's going to take the last 200 days worth of pricing, put that all together, divide that by 200, and then it will give us the average price on our right hand side. Now, the reason we add this 200-day moving average line is because we want the share to be above this 200-day moving average line at all times. Now, we can see that it's currently underneath this 200-day moving average line. It doesn't mean that it's a bad thing, because it's still really close to the line. Okay, because we can see that it's been above the line, below the line, above the line, below the line a few times. So it's not a bad thing that it's below the line currently. It's got that momentum to be able to continue in that bullish trend. All right, so this gives you basically the overall movement where what the share's direction is. So once we've seen where the share is below the 200 or above the 200, then we can go and add our other indicators. Now, the first indicator we're going to go and add is the stochastic, because we want to know why is stochastic telling us to buy, because we can see why long tells us to buy, right? Because it's in a constant bullish trend. Okay, it's a constant upward direction. So we're going to go to studies, and we're going to go and add our stochastic, and then just say create, and it's going to create the stochastic for you. Now, how the stochastic works is, so I'm just going to enlarge this quickly. So how the stochastic works is it's got two lines separating the overbought and the oversold sections. Now, the first one would be your 80 line. Now, that's your overbought section. And then the other one would be your oversold one. So that's the 20% line. So anything below 20%, that's your oversold section. Anything above the 80, that's your overbought section. Now, you typically want a share to be below the 20% line, all right, when you buy shares. When you want to sell shares, then it needs to be above the 80 line. Okay, now it's got two lines, which makes up the stochastic, which would be your black line. Now, the black line is your stochastic, and then the red line is your signal line. All right, so when the red line crosses through the black line, all right, remember the red line is the signal. Okay, so when the signal line, the red line, crosses through the black line, which is the stochastic, crosses through in an upwards direction like over here, that would be a buying indication. When they cross in a downwards direction like over there, that would be a selling indication. All right, so we want to buy a share when it's low and sell it when it's high. Don't buy when the share is high. All right, when a share is at the top like this, it would more likely the price would start to dip. Okay, so it's not wise to buy a share at the top. You would always buy a share when it's below the 20% going in upwards direction. There's a few other things that also go along with that we call convergence and divergence. All right, so but there is a few videos that you can go and watch on convergence and divergence to make your choices even easier. But for now, we're just going to focus on the crossovers. All right, so that crossover over there would be a buying indication. All right, so that's the stochastic. The stochastic is quite easy to understand, but the other one that we use with the stochastic, we call the RSI, which is the relative strength index. So we're going to go to studies, go to RSI, and then you'll see that it's also going to give a little block, but here we need to make a change. So we're going to change this period from 14 to 3. Okay, and then just say create, and it's going to create the RSI for us. Now, I like to put the RSI at the top of my stochastic. Now, to do that, on the right hand side, you'll see that you've got a few tools over here. You've got an up arrow, you've got a gear, and you've got an X. Now, on the stochastic, you've got an up arrow and a down arrow with a gear and an X. Now, the X will obviously close the chart. The gear is to change the setting of your advisor, and the up and down arrows move your RSI and stochastic up and down. So if you click on the up on stochastic, it will put your stochastic at the top. If you click on the down button, it will move your stochastic. But I want my RSI to move one up because I like my stochastic of my RSI to be at the top. So RSI would be my main indicator. Okay, so this the RSI would be a bit stronger, give you stronger indications than what the stochastic would. Now you'll see that it only gives you a black line, but you can give it a raised signal line as well to make it easier for you to see the buying and the selling indications. It works in the exact same manner than what the stochastic does with the 20% and the 80% line. Below your 20 would be your oversold position. Above the 80 would be your overbought position. All right. but you can add a red line on top of that. Now to do it, you go to studies, go to moving average, and then change your period to 3, exact same as what your RSI is. So 3 mean basically means 3 days, all right, or 3 weeks or 3 months, depending on what type of chart you're looking at. So you'll be able to change it on the top left hand side. So 1 day, 1 week, 1 month, all right. So 3 would be 3 days, all right, because it's currently on a day chart. If I change it to a weekly chart, it would be 3 weeks. If I change it to a monthly chart, it would be three months. Okay, so I'm gonna only keep it on daily because that's what we're currently looking at, and I'm going to go and add a moving average of 3. All right, so it's 3 days on top of the RSI. So on the field, I'm going to change it, the field from close. So close is basically the main chart, but I want to change the field to the RSI. So I want the 3-day moving average to be on top of the RSI, and then make the type exponential. So a simple moving average will have a wider range, all right, or a wider movement, but we want a tighter movement, which is the exponential moving, okay, and then create. And it will create the exact same line on top of the RSI, which is on the stochastic. So that would be your buying and your selling line. So the red line is your signal line, and the black line is your RSI. All right, your 3-day RSI, black line, and then the 3-day moving average, exponential moving average is your red line. Okay, so when I take my vertical line once again, we'll see that that would be my buying indication, same as what my stochastic gave me over there. That's a buying indication telling me that I can go and buy the share currently. And same thing when they cross in a downwards direction, like for instance over here, that would basically tell you to go and sell. All right, same with what your stochastic did over there. It told you to go and sell. Okay, so when both of them, if the one basically says the same thing as the other, then the share price would most likely go up. Okay, and that's why it chose clicks, because clicks is currently the overall movement of clicks is quite good. All right, so the longevity of it is quite good. So we can expect a long-term investment on this. And then also we've got 2 buying indications currently, one on RSI and one on stochastic. All right, with a bit of conversions between this line, between this point over here and that point over here. So it looks like the shares running out of steam in this downwards direction. So it wants to go back up. Okay, so this is typically what you'll use in the beginning for every chart that you're going to look at. For traders, it would work a bit different. You'll have a 5-day moving average on top of your main chart as well, just to give you those smaller buying or selling indications. All right, but for now, we're going to focus on the investment side. Okay, so currently we can see the clicks is quite low. It looks like it's got opportunity to go back up. We can see for the last few days, it's got this bullish momentum. So these green candles are basically telling you that the shares price did go up. Okay, so you'll see that we've got a red candle over here. It might look confusing, but the thing is the shares price did open higher and closed lower, but it's still higher than the previous day's closing. So the previous day's closing was 241 Rand, which today's closing is 242 Rand. Okay, so it is still higher than the previous day. So you still would have seen some profit on the share. Okay, even though we've got a red candle, but you can get basically lower candles like over here in this section over here. So the more red the more red candles you get, the lower the price would basically go. But you will get it sometimes that the price can open higher like over here and then close a bit lower, but it's still higher than the previous day's closing. Okay, so that doesn't mean that you lost money. It means that the shares price did go up, but it just closed a bit lower, but it didn't close lower than the previous day's close. Okay, so we can see that in this, with these last 3 days, the pricing did go up. All right, so there is potential for CLS for clicks to go up. Okay, now what we need to do is, if we want to go and buy the share, first we need to go and calculate how many shares do we need to reach a break-even point of 4%. Now to do that, we're going to go back to Sharetrackin and Compass, and we're going to go to our calculators and then investment calculator. Underneath investment calculator, it will tell you to start typing to search. Now we know what the code is, CLS, or you can just type the name, clicks, but I'm going to use the code CLS, and then it will give you clicks group limited CLS. So you can just click on it and it will automatically fill in the share code with the current price. It won't fill in the rest for you because this needs to be calculated, okay, with the quantity. Now a typical if we look at buying a share, doesn't matter which share you buy, right? You will be paying brokerage fees, whether it's is through Easy Equities or Standard Bank or FNB or IG Markets or any place that you buy and sell shares, you will pay a brokerage. Doesn't matter where you go, but brokerage fees are a thing because the banks also need to make money when you invest. Okay, now we use Standard Bank's costing, which is 110 Rand per trade, okay, on your buy, and 110 Rand for your sell. But on top of that, they'll also have VAT that they charge with the STT, a securities transfer tax, and then also IPL, investment protection levy, and a straight, okay, which is electronic transfer tax. So you will pay a few taxes. So, but the moment you sell out, you will not pay the STT, the securities transfer tax. The next guy that buys the shares, you will pay the securities transfer tax. So you'll always see that your buying brokerage would also always be higher than what your selling brokerage is. Right, so the selling brokerage would be lower because of the SCT being removed. So if I take one share on this, my buying brokerage would be 138 Rand and 10 and 3 cents, but my selling brokerage would be 137 Rand and 42 cents. Okay, so you'll automatically see that the SCT, securities transfer tax, was removed. But now we'll see our break-even point percentage is red. All right. Now what it means is that we need to go and buy more shares. Now we want this break-even point percentage to be lower than 4% at all times. Because if we look at the current price is 242 Rand and 61 cents, but the break-even price is 518 Rand and 6 cents. So we need to grow all the way to 518 Rand and 6 cents before we even start to break even. Okay, so anything past that would be profits. But we need to buy more shares so that we can get this break-even point below 4%. Now, if I take 10 shares, right? So 10 shares will give me a break-even point of 11%. So then I need to grow from 242 Rand and 61 cents to 270 Rand and 70 cents. Okay, but still it's not enough. We need to buy more shares to get that underneath 4%. So I'm going to do a quick calculation here. So that's 25 shares, 31. So 30, I think 30, okay, 31 shares. So 31 shares will get us below 4%. So now it means that we need to grow from 242 Rand and 61 cents to 252 Rand and 8 cents. But my total would be 7,677 Rand and 15 cents. So obviously my total would go up the more shares I buy. Remember, if you're investing, obviously you need more. All right, so the more you put in, the higher your profits would be. The less you put in, the lower your profits would be. Now with CFDs, if you're trading CFDs, it's a totally different picture. With the same investment, I would have put in, let's say, 1,000 Rand to get exposure of 7,000 Rand. But unfortunately, we're not doing CFDs, we're doing equities. Okay, in this section. So we'll need in total 7,677 Rand and 15 cents to do this investment. Okay, so there is an easy calculation to work this out. Instead of going like that, working out the quantity, what you can do is you can take a calculator, take about 7,600 Rand, divide that by the current price, and that would tell you exactly how many shares you would need. If it doesn't work it out exactly on that, you can always just add 1 or 2 extra shares or remove 1 or 2 extra shares if you feel like the total is too high. But your break-even point percentage needs to be below 4%. Okay, so that you'll be able to make profit much quicker. So the moment the share reaches 3.90%, then you would break even. Now, what does it mean? Now, that's your two brokerages counted together. So that's buying brokerage plus selling brokerage would be 3.9% of your total. All right, so 156 plus 137 will give you 3.9% of 7,677 Rand and 15 cents. Okay. So now that we've worked out how many shares we need, we can go over and buy the shares. Now, how do we do that? We can either go back to the stocks page, so I can go to analysis, go to stocks, do the filtering again, and then click on the share and then say buy shares. Okay. Or what I can do is I can go to the top, click on search and type in the code. So CLS, and then I can just click on the share and it will give me my security details once again. All right, the same as what would have happened when I went to the stocks page. Then I can go to buy shares and I'll give him my security details. Now, I've got a few accounts here. I've got my CV account, simulation account, trading account, simulation account. So I'm going to use the bottom simulation account, and then I need to enter the amount of shares. Now, we already worked out how many shares we need. We need 31 shares. So we're going to enter the amount of 31 shares. It's going to give me my break-even point percentage of 3.9%, exactly the same what we've worked out on the investment calculator. And then also what we need to do is we need to enter a comment, why are we buying the share? Now, as I said previously, you need to do either fundamental or technical analysis. Now, usually I prefer both, to do fundamental and technical analysis. But in this case, we did more technical analysis than what we've did fundamental analysis. Now, technical analysis, we basically saw that the RSI is crossing in a bullish trend below the 20 or just above the 20, and then also our stochastic also crossed. So RSI crossing a bullish trend and stochastic crossing a bullish trend below 20%. And we can see that for the last 3 days, our price went up. Now, that's already 3 reasons to buy the share. All right, because you always need to give a good comment why you're buying the share. All right, so in this case, it would be RSI and STOCH. RSI and stochastic is giving buy indications below 20% in bullish trend, and price is positive for the last 3 days. All right, so that's more than good enough reason to buy the share. All right, so it needs to be a decent comment why you're buying the share. All right, so in this case, we said that RSI and stochastic is giving buy indications below 20% in bullish trend, and price is positive for the last 3 days. Okay, so that's more than good enough reason to buy the share. Don't use small reasons like the share is doing good, the share price is going up. You need to use decent comments why you're buying the share. If it comes to fundamental analysis, then obviously you would have mentioned that directors' dealings, you would have mentioned any news that you've seen, you would have mentioned financial statements, stuff like that. That's all fundamentals. Anything that you heard on the radio, anything that you've seen on TV. Okay, don't just say they on TV they said that the share is going to do good. No, what did they talk about on TV? What did they talk about on the radio? All right, so it needs to be a decent comment why you're buying the share. What I would usually suggest is use a technical reason with your fundamental. Then if you did fundamental analysis, use one fundamental with a technical. Okay, so it just makes your reason so much stronger for buying the share. Then we can go back when you buy the share now and you put in your reasons, we can always go back and see, did you buy the share for the right reason? Right, and then why did the share maybe go down when you bought it? Okay, or why did your share go up when you bought the share? All right, so after you've entered your comment with the number of shares to trade, you just click on confirm buy, and then it's going to give you this page again. It would have given you a little block on the bottom left hand corner telling you that your buy order has been confirmed. You can just close that, go to investment dashboard, and then on your investment dashboard, when you click on your simulation, you will have that one share clicks. All right, now it will give you the code for the share, the quantity, unit cost, total cost, current price, and current value. All right, now before we move on to total movement, now usually people ask, but why is my unit cost higher than my current price? Because that's not the price that I've bought the share at. Yes, that's correct, but the unit cost is basically your break-even price. So the moment your current price is equal to your unit cost, anything past your that unit cost would be profit. So when your current price is more than your unit cost, then it means that you would be in the green in your overall movement. So overall movement, you will be in a minus because of your brokerages, right? Because we've paid brokerage fees. All right, that's the percentage of brokerage that we've paid. Okay, so then same with the total cost. Total cost would always be more than your current value, because if you take 293 Rand and 7 cents, add that to the current value, that will give you 7,814 Rand and 58 cents. All right, so that is basically your break even price. Okay, so your total break even. So when your current value is equal to your total cost, then this would be zero. Anything past that zero would be profit. Right, so always remember, unit cost and total cost will be higher because of the brokerage fees. All right, brokerage fees are added on top of the current value, and current price to give you total cost and unit cost. All right, then today's movement will give you today's movement. What I did, just ignore the decimal. It's 157 that it's moved. All right, so just ignore the decimal that it's giving you. So it's 157. And then the overall movement, so the overall movement that the share did so far is minus 293 Rand. Obviously, because we've paid brokerage, it's going to be minus 293 Rand and 67 cents. So when you start making profit, this would be in a positive and not in a negative. So it will more or less look something like this if we go over to my trading account. So there's my overall movement on my shares. So it would look something like that: 27,000, 9,000, 79,000. All right, so that would be more or less what it's going to look like. So you'll see that now my on my trading account, all my current pricing would be higher than what my unit costs were. All right, same with my total cost. My current value is higher than my total cost because I've already broken even. So anything past these would be profit. All right, so there's my overall movement, which is my profit. So all of this would be profit, and that's your percentage movement in profit. Okay, so on the simulation, we can see same thing. So when this starts to go green, then you know that this will be positive and not a negative, and then your current price and current value would be higher than your unit cost and your total cost. Okay. Then also we need to go and set up a SMS notification for the share. So we're going to go over to action, click on action, and then go to set stop loss. So now at the top, you'll have current value, stop loss, and growth stop loss. Now, sorry, target value, stop loss, and growth stop loss. Now, target value is what you would want to reach. All right, so you want to reach, for instance, 10% or 15% or 20%, but don't be greedy in the beginning. Rather, leave it on 10%. All right, don't change the target value. Leave it on 10% for now, because you can adjust it at a later stage. Okay, then your stop loss percentage. Now, stop loss, I like to put in, especially on investment, I would go anything from 8% to 10% or 7%, but I won't go higher than 10% because our T's and C's tell you that your stop loss needs to be at 8%. Now, the stop loss, basically how it works is it will work from the current price that you bought the share at. So if I take my horizontal line, so we've bought the share basically on that price over there. So at the current closing, so 242.61 is where we bought the share. But if the share price drops now by 8% from here, right? So 8% from there would be more or less, just try and get this right. So 8% from there would be more or less over here, right? So that's more or less 8% drop. All right, so if it drops by 8%, then it will obviously let you know, listen, you need to go and sell out. Your share has dropped by 8%. Now that's the normal stop loss. So it will work out from your current price. So from this point in time, right? So where this line is currently, that's your stop loss. Okay. Now the growth stop loss works a bit different. Okay. So this one I usually also set to 8%. Now this one is this one is your trailing stop loss. Now this one trails what your share price is doing. So let's say, for instance, where's the continuous line over there? So we bought the share over here. Let's say that is our buying price. So then the share price went up, it fell a bit with 3.8%. It went up with 11%, went down with another 4, went up with 12%. So the share price continued to grow, and then all of a sudden, let's say over here, the share price starts dropping. So 8% from there would be more or less over here. All right. So that's 8% drop up until there. All right. So up until there, that's your 8% drop. So that's how the growth stop loss works. So it works it out from from here. So the share price starts to grow. The stop loss or the growth stop loss trails your price up until there, so 8% from there to there. Then it will tell you to go and sell out, right? Because that's your 8% mark. So at least you would have grown all the way up until this point over here. Okay, so this is basically you'll only take the profit up until this price. So up until 245, but you bought the share at 206. Okay, so you will take that percentage growth from there up until there, which is 14% growth at least. Okay, which you would have made. Okay, just want to clear all these drawings. Select none, clear drawings. All right, so that's how the growth stop loss basically works. So that's trailing stop loss, not like what your stop loss does right from the beginning. When the moment the share price drops, then it's only let you know when you've lost money. All right, this one at least tells you, listening, okay, the share price has gone up, but it's gone down by a slight, but you've still made some profit at least. Okay, then you need to activate the SMS notification into your cell phone number. So let's use the 02 support number, and then click on intraday SMS on. All right, so intraday SMS, this depends on you. So the intraday basically would let you know 3 times a day what your share price is currently doing, so that you don't need to go and log into the software 3 times a day. So that would be morning, afternoon, and evening that you would receive an SMS telling you what the share price is currently doing. Now, usually when your share reaches your target value, you need to come into the software, see what your share is doing, and then decide, do I want to sell on at 10%, or do I want to hold on to the stock because the stock is still going up? Stop loss, when it reaches stop loss, sell the share immediately. Never argue around a stop loss, because obviously you've already lost 8%, so now you need to gain back 8% plus you need to go back. Let's say your break even point was 4%, so it's 8% plus 4% on break even. That will give you a total of 12% that you need to grow. Anything past that 12% only would be profit. Right, so you'll need to wait a while before you make any profit then. Okay. Then your growth stop loss, when it reaches that, same thing, rather than sell out the share. But the thing is, you can argue around that, saying that, okay, yes, it has fallen with 8%, but stochastic RSI is low enough for the share to turn back around. Right, so you need to go and do technical analysis once it either reaches your target value or your growth stop loss. Stop loss, I would just go and sell out, right? Because the reason that it tells you stop loss, to stop your losses, right? Never argue around a stop loss. Okay, so the other two that you get is increase and decrease by X value, right, from your set value. All right, so intraday you need to turn on if you want to get 3 SMS notifications per day. All right, once you've done that, you've selected activate, you've decided on your intraday, then just click on update values. At the bottom left hand corner, it will tell you that your SMS has been created. All right, so let's say, for instance, you have reached your target value or your stop loss, and you want to go and sell out the share. Now, what do I need to do? So I go to action once again, and then I click on sell. Then it will tell you you own 31 shares, and then also to supply a comment. Now, there where it says you own 31 shares, right? We get a lot of questions around this. That if we put in the comment, let's say, for instance, stop loss reached. All right, so this one isn't as intense as the comment for your buying, so you can use an intense comment if you really want to, but in this case, because it's a sell that we're doing, you can either enter target value reach, stop loss reach, growth stop loss reached. So those 3 are good reasons, but if you want to use anything else, it needs to be good reasons. Once again, a long comment. All right, and then when I say sell, nothing happens. All right, I can click sell the whole time, but nothing happens. Why is that? Now, the reason for that is because we need to enter the amount that we own. So it says you own 31 shares. I need to enter 31 shares. Okay, because currently, if I take that out, it's not going to work out anything for me, right? So there's brokerage costs, but it will only tell me what I've basically lost. So I need to enter the amount so that it can calculate my profit. Okay, so I'm going to lose obviously on this because I didn't make anything. Okay, because I'm going to pay brokerage once again. Then I'm going to sit with a loss of 431 rand. Okay, so if I go and click on sell now, then only it will sell the share, right? Because I've entered the amount of shares. So remember always to enter the amount and enter the comment. If you didn't enter the comment, it will give you a warning. All right. If you only enter the comment and you didn't enter the amount, it won't give you any warning. All right. You need to enter the amount of shares. All right, before you sell. Once you've entered your amount plus the comment, then only you can click on sell, and then we'll take the share away. All right. So the share isn't there anymore. Now, where did it go? That would be underneath your accounts and then your financials. So if I go to my simulation, go to my transactions, then I'll see, okay, not that one, it'll be the other one. So there we go. So there's my transactions. So I've got CLS over there and CLS over there. There's my 31 that I bought and there's a 31 that I sold. Okay, so this is your bookkeeper. So you just select the account that you bought on. There's a summary for everything basically that you've did. The current holdings, currently we don't have anything because we sold the shares. Safety ratchet telling you if you need to go and sell the share or not. So this would do the same as what your SMSs do. All right, so safety ratchet would tell you if you reach your stop loss or your gross stop loss or your target value, telling you to go and sell. All right, but the SMS notifications does that for you. Okay, then with your transactions and everything that you've bought and sold, your cash flow, so where your money basically went, and then your income expenses, more or less the same as your cash flow, but just a little bit of breakdown. All right, not as intense as the cash flow. Okay. So that's the basics of it. So if there's any questions on basic 2, you're more than welcome to give us a call on underneath contact us. There's all our contact details. Underneath contact us, there's our address, phone number, support numbers, email addresses, and then also there is a need support function. If you've got any questions or anything relating the session, or any other questions, you can just go to click on ask question or request designation, enter your name, your contact number, email, message, and then submit, and it will send it through to us, and then we'll call you back or email you back. And usually it's about 5 minutes, 5 to 10 minutes, depending on how busy we are. Then we'll contact you back and we can assist you with your query. All right. So next week we're going to do Sharetrackin Basic 3, and then talk a little bit more about CFDs. All right. So enjoy the rest of your evening. Then we'll speak next week again.